Hello and good morning to the late breakfast show with myself and Jose. Good morning, everyone. Good morning, Jose. How are you?
Pretty good, Neil. How about yourself? And good morning to everybody watching. Morning to Josh, morning to Terry, morning to Gail. Good morning to Peter and everybody else. So thanks for joining us. And yeah, Neil, good morning to you.
Yeah, sorry about being a couple of minutes late. We had a couple of things we needed to fix behind the scene, but it seems like everything has been fixed right now. So we are good to go. We actually have here a comment from X, from Stark Bullish.
Oh,
Amazing. Amazing. One
they
of the rare
exist.
breeds.
They exist.
Yep.
Um,
Um, so yeah, today, we can talk. Of course, we will talk about Google. We'll talk about Perplexity, OpenAI. I don't know if you had the time to go and check out the Grok 4. That announcement was made yesterday night.
Yeah, I mean, no posted that I was up late watching it. Unfortunately, I wasn't. They were like 10, 15 minutes late, and I said, screw it. Once they were 5 minutes late, I'm like, I'm done with this. I'll see if there's anything cool. So I haven't watched the video on it, Neil. I am. I saw you posted a little bit on some of the betting platforms on what's happening and kind of voting there. I just want to rewatch the video because I do believe their live stream sometimes they talk about their data center build outs, their GPU build outs and stuff like that. And that's what I'm going to be curious about because it doesn't seem like there was anything too crazy that I haven't seen everybody posting about it. So it's going to be more of like the in-depth behind of how they did this training that I'm going to be curious to learn more about.
Yeah, I think so. So far, I think only X Premium Plus subscribers get access to Grok 4, Super Grok. And all the rest, I guess we will have to wait. But yeah, the betting markets, and let me pull it up real quick. The betting markets were a bit less pleased, let's say, with the announcement. Where is it? This is us. So as we can see here on Calci, we can see that yes, it did go up. This is, by the way, Gemini at the top here. It did go up. It did go down when the announcement was made, and then quickly that changed. This is on Calci for best AI for the month. But if we look at Polymarket, it's a little bit better. But here's
That's wild. I don't know. I don't know how people are sleeping on OpenAI. I think OpenAI is killing it.
clearly
I gotta
not.
look. I gotta get on these Poly Market. I gotta make an account here because that's I don't know.
You think it's free money?
It seems like it. It does. It's insane how many people think XAI is winning. Again, maybe I haven't seen the Grok 4. Um, but as an everyday user, I can see Gemini up there. But I think people are definitely sleeping on how much OpenAI is doing. I wonder if there's a lot of the fear with kind of all these engineers leaving that place. That's kind of creating some of the fear for OpenAI. But to a daily basis, OpenAI kills everything else I use.
Interesting. I do wonder. Yeah, I guess it's all the models, because I do wonder,
Mm-hmm.
right? Because you pay for it, so of course yours is more
Yeah.
powerful than a free version. But
Mm-hmm.
I assume it has to be either an average across the board, or just
Mm.
the best model from each and every one.
Okay. Yeah, that's what I was hoping. Because I'm thinking about the best model, right? The best model I could see thing, but I don't. It's crazy to think. I don't think all these people that are betting pay for the $200 a month for either Google or um app for
Or any
OpenAI.
other. Yeah.
Yeah. So my end of the question is, how does this end up? Um, who decides the final answer?
You
Like,
know,
does someone?
that's also a very good question.
Is it just going to
Also
be
a
a
very good
popularity
question.
question, and whoever had it right wins, and then
This
you
is
get to
like a
sell it?
sentiment type of thing.
Yeah. So if it's a sentiment, that's a whole different. If there's like a final answer, if there's like a judge in these, or if it just ends up being by the popular vote. Um, and I guess Peter mentions it probably explains it better. I guess it all depends on the requirements. Some might see which one is better than the others. Um, but
Yeah.
yeah.
Here, Basel says, I'm mostly using, sorry if I butchered that name, using Google recently with their overview feature. I agree. Same,
Hmm.
same here. I mean, it has become so easy to get a full answer. Of course, I think in the United States, you can even continue conversation with search labs. Here, it's still not available, but I agree. Like if I if I am using Gemini, it's on my phone. Like when I need like a full conversation, or when I want to take a picture or something, and then like circle to search, or image to search and things like that. But yeah, I agree. The Google search bar has just changed. So it becomes so good that I don't really need to go to a specific website anymore.
And Neil, I'm gonna just get I'm gonna join really quick. I don't have the pull out the question, so I'll be right back.
No problemo. In the meantime, let us see if we got something else here. Of course, you can ask us questions about whatever. I don't think there is much going on today, anyways, in the market. I did, and he's back. I did see an announcement from Adobe in the Premier League, and that they announced a partnership to bring AI-powered personalized digital experiences to fans around the world. So I guess Adobe is alive. Of course, the stock not so much, but we'll uh, we'll see how that evolves over time. Um, but yeah, I do want to touch on the announcements from yesterday. So yesterday we had, of course,
$4 trillion company. Is that the
yeah,
announcement? No,
but not
no.
anymore, not anymore. So
Well, with the
yeah,
TSMC numbers, maybe.
yeah, I see
Did that?
TSM. Why would it grow 40% still?
Yeah, it's back to, if it once it opens, it's gonna be a $4 trillion company again. All right, Neil.
Congratulations. Congratulations. Okay, let me pull this up. So yesterday we had, of course, the announcement from Perplexity. So it seems like it was today's date. Not even going to put the audio here. So Perplexity released their own AI-powered browser called Comet, which, for those that don't know, is a sort of agentic browser, which you can see right now here on the screen. Funny enough, this is Google Maps from Google. And also,
That's
funny
wild.
enough, this browser has been built on Chromium, which is owned by, of course, Google. So, um, so that came out yesterday, but that was not the reason why Google stock dropped for like 10 minutes and then it rebounded. It dropped because a report came out that um, OpenAI is going to come out with their own Yeah, we're going to talk about our YOLO bet that is turning out to be not so great at the moment, the applied digital one. And here, your friend Jensen on the screen. But yeah, OpenAI is also planning apparently to come out with their own browser, and that AI-powered browser is also built on Chromium, which is of course owned by Google, but Google is not really making money out of it. But yeah, I just again what we've seen here, it's great and all, but it does seem like it's and I did a whole video about that, a whole video talking about all the features. It does seem like this is, yes, it's a browser that lets you use AI agents in the browser to do specific things, but at the end of the day, as you've seen, most of the activity is very, very similar to you just going to perplexity.com, right? You just search, you just tell it something, and then it does it. Of course, there are some things like we've seen with the maps and all, where it does things for you. And so I did some digging, and turns out that Google, I didn't know this, but apparently for also Google Power users and those that are subscribed to Gemini Ultra, well, apparently Gemini is already in Chrome for those type of users. Now, of course, this is not an agentic browser, but as you can see here at the top of the Chrome browser, apparently there is already a Gemini icon. We don't have it because we don't have a Gemini Ultra. But this is already Google's response to an AI powered browser. Now, of course, again, this is not an AI agent because this is reading the screen, right? It reads what's on the screen. You ask it a couple of questions, whether it's a recipe or whatever, but it can, for example, add things to your Google Calendar if you, of course, connected to the whole Google suite of products. And so when I saw this, I was like, why does nobody know about this? I'm like, so
I think they do such a bad job, because I've had that little star or whatever they call for the Gemini logo up top, and I always just like push it aside. It started to come out to me like it reminded me a little bit of like the Clippy from Microsoft that would just start appearing randomly. Um, but I didn't know it can do all this. I didn't know I can tell it to do something with my application, with my calendar and stuff like that. But it makes perfect sense here.
yeah, I mean, it makes perfect sense. I made a post yesterday, and I tagged Sundar and the VP of Gemini. I said, I'll work for free for you. Just give me the pro version and a Pixel 10, and I'll promote the crap out of this. Hopefully they'll see that post. But I was like, okay, this is great. Of course, last thing is, don't forget that Google Chrome is free to use. Okay, Perplexity Comet browser, you have to pay for it, right? You have to be a Perplexity Max subscriber, and then in the future, a Perplexity Pro will have access to it. So browsing will become not exactly, name a better duo. There is no better duo. There is no better duo out there. Browser is free, right? Browsing the internet is free, thanks to Google Chrome, thanks to Edge. So yes, the others might come out with some fancy schmancy stuff, OpenAI or Perplexity, but the fact that you have to pay $200 a month for it, I mean, how is this going to pose a threat to Chrome? I don't think it will. And again, this just shows the power of Google, because they can literally turn Chrome into an agentic AI browser if they want to.
And the great thing with Google, right, is Chrome is a money maker with all the ad platforms, right? So they just have to learn how to integrate ads into this platform, and that's a great way for them to not be able to charge, and like you said, bring it to the consumer at a way cheaper price. The other thing is, it's just even more data being fed to them. Now they get to see how consumers are using AI, and you can kind of tailor your model or your application towards that. And I think it's a great example of how I believe OpenAI is the best model out there. But it seems like the regular, typical consumer isn't using a model like I use it. So the other models might seem better, and that's all that matters. It's all what the consumer wants, and that's what's going to dictate who gets like the better business. And the final thing is Google with their own ASIC solutions, the TPUs. They are going to they have a nice amount of infrastructure that they can have at their own efficiency rate that tends to do really well. So I mean, more bullish for Google here. It's just that guy right now.
Yeah, I agree. And again, I think the catalyst is just purely the earnings report and the earnings call. When management will just come out and say, look at our numbers and share more data about how many, search query growth, how many users Gemini has per month, etc., etc. And I think that will be the catalyst for the stock to start moving up, because I've also been seeing some analyst notes, which I'll pull up right now if I can find the bookmarks
And
on.
while you're looking, we still got some more new good mornings. Good morning, good morning, good morning. Green day to everyone. Lisa's in the house. I don't know if you mentioned it while I was switching off. Hello from Norway. Christian, hello. So good morning to everybody, and thanks for joining. Like always, we'll get to some questions in a bit. We're just talking really quickly about Google, and then we have some cool things to some questions we can get into.
Correct. So first up here, we have a note from TD Cohen, Kaushik Big Bull Cap on X. Very, very good account here, sharing a lot of analyst notes. Investors will look for updates on Gen AI initiatives, particularly with AI Mode's recent broad rollout. We think AI Mode will drive higher engagement as search users remain on Google for longer interactions with fewer visits to third-party publishers, particularly on informational searches. Meanwhile, we don't expect any meaningful negative impact to product-related searches, at least in the near term. We continue to view Google Search as relatively well-positioned in current macro environment, despite secular chatbot threat. We expect the lower funnel direct response advertising business to hold up well through 2025 amid a resilient US consumer. Google shares are down 8% year to date still, versus the S&P being up 6%. Google shares are trading at 15.4 times PE excluding cash, 9.7 times EV to EBITDA, and 5.1% free cash flow yield on their fiscal 26 estimates, despite market-leading ad business, massively scaled consumer digital platform, and robust cloud growth profile. We forecast 10% total revenue and 14% EBITDA CAGR from 25 to 2030. I mean, it's not bad growth projections and pretty good price to pay. We then had an actual price raise, so price target raise. They reiterated I don't know who this is, Oppenheimer, reiterating outperform and increasing price target from 200 to 220, as surveys suggest, as consumers embracing AI modes with real-time queries, making it preferable to ChatGPT. Aha, this is very good to hear. Additionally, Search is currently trading at 6.2 times 2025 EBITDA, which discounts current AI risk in our view. We've talked about this in the past. Like, even if there is uh, threats and all of that, I think risk reward wise, it just makes a lot of sense right now. While only 50% of respondents know the difference between AI mode and AI overviews, 77% of knowledgeable respondents are using AI mode. 66% of knowledgeable respondents find AI mode better than search, and 60% better than ChatGPT, and 53% click on links often, very often within AI mode, increasing estimates to pre-tariff levels as macro remains healthy. I don't think AI mode is enabled here, so I don't know. I don't know what the big difference is going to be to me when I use it, but I'll find out in 2030, I guess.
Yeah, I see AI mode, Neil. Maybe I got to start giving Google a little bit more of. I should give them. I should try it a little more often than what they have. I see AI mode, but I think one of the things that I could say bad about Google is I use Google search on a daily basis, and I want to use it how I use it. I already know how I use it. I don't need to learn something new, and I think that's one of the assets. In like I think we talked about it in another stream, where as a consumer, if you're getting a new application like ChatGPT, like Perplexity, you come with this open mind of, hey, I know this is a new application. I need to learn how to use it, and it's completely new. With Google, the thing that I find might be a little bit slowing down on the consumer adoption is when I go to google.com, when I do search, I already know how I do it and how I've done it for the past 10, 15, 20 years, however long I've been using Google. This new AI mode is not something that is on my traditional Google workflow. And it's like, it's hard for me to disconnect my, people have, when something's reoccurring, they have a, what is that
A
word?
habit.
Habit. People have habit, right? And it's going to be very hard to break that habit of how people normally use Google to start using all that AI applications. Like for me, like I see AI mode. I've never used AI mode in my life because that's not what I go to Google for. So I think that's something. I wonder if the rest of the consumer or a majority of the consumer has that same habit, and I wonder if that habit creates a little bit of a headwind to the adoption of some of their AI solutions.
First of all, maybe give it a try and actually tell us what the heck what the heck it is, and maybe if you like it, you'll actually only use that. Because if it is better than the traditional search, because I still think it is just under that Google search bar. No, when you go
No,
to
so
google.com.
for us, when over here where we have amazing technology, Neo, you have like your search, and you have like your news, your images, your videos tabs, and the
Yeah.
first one actually in there is AI mode. So you can even, it's a whole
Mm.
different tab that gets AI mode. I'm pretty sure they have kind of the AI overview, and in the AI overview you can probably even click AI mode. I do use AI overview a lot because it's already integrated to that main search really well. AI mode seems more like a few extra clicks that I want to do, so that has prevented me a little bit from using that.
Okay. No, fair enough. Peter has said, I mean, this all sounds good about Google, but how are they going to make money? The overwhelming majority of their revenue comes from search ads. Correct. Google search generates $50 billion for them a quarter, growing around 10% right now. Currently, this is still their business, right? Even with all of this AI overview, AI mode. Plus, last quarter, they told us that AI overviews are being monetized at the same rate as traditional search, as standard search. So that's good to know. Now, of course, with the help of AI, you can of course make sure that the ads that you're seeing are just much better targeted, right? Whether it's on YouTube or just on Google search, just better targeting, higher ROI, and people will just pay more for that. Um, it's for the young kids in school that are not starting to change.
Thanks for making me feel old. No, no. Um, but yeah, back to here, Neil. I mean, I think another thing is, I kept talking that one of the headwinds is the things changing. But I also think that's something Google needs to do. It can't be an Apple in this situation. I think one of the things that Apple is doing is Apple is trying to protect its business, how it knows it is, how it knows its business traditionally does. But I think AI is one of those business that, while you can just maybe integrate it, the real transformation is transforming this business model that you have. So Google is trying to cannibalize itself while still trying to add its massive revenue maker. And I think that's the right move to make with this innovative technology. You want to continue to innovate. You don't want to be left behind like Apple is being left behind. All their engineers are leaving. We saw Meta continues to spend millions of dollars. They spent 200. They offered someone. Did you see that, Neil? They offered an engineer more money than the CEO gets paid at Apple.
It's the
I don't know.
COO, no?
Oh, the COO, was it? I thought no executive got
Yesterday.
paid more. Yeah, I
Yes,
thought
yeah,
no.
yeah.
Oh, okay, so it's just the COO.
Crazy.
But it's wild. But I think you need to be cannibalizing your own business for you to succeed here with the AI space. You can't be playing it safe. And as someone who enjoys the growth stock style, that's that growth mentality. You created a business, great, but that's not where it ends. You got to learn how to adapt. You need to keep innovating, and I think Google has that fire under them.
Yeah, no, I agree. And again, the fact that Google Alphabet is such a profitable business, it allows them to offer a lot of services for free. Now, of course, we know when services are free, then you are the product. Yes, advertising is a thing. And me personally, I couldn't care less. Like if you offer me a great service and the only thing I have to give back is, okay, get exposed to advertising because you know what I like and etc. etc. Fair enough. Fair enough. I mean, I don't mind. And then if you don't like advertising, just like on YouTube, for example, you pay for YouTube Premium and you don't have any advertising anymore. So, yeah, as long as they keep offering those great products for free, I just really don't see how others are going to compete. Because yes, we live, of course, in the bubble, in the investing world, in maybe the tech world, and we know about all of these things. But people outside are not willing to pay suddenly $20, $200 a month for something that they've been using for free for all their lives, right? I think, yeah, exactly. People outside X don't even know Grok or barely using ChatGPT. I think ChatGPT is known very well outside because that was the first one that came out. But yeah, I'm pretty sure that on X it's a bubble. That's why I said I think. I mean, there's a reason why we on X say XYZ, and then you ask on somebody else, and it's like, what do you mean? Like, yeah, okay, clearly, bonjour, bon matin in Canada. But yeah, I agree. I mean, with Grok, also with all of these new models that come out, right? The arena scores and all of that, that's cool and all. But at the end of the day, is it useful for what I need? Because not everybody needs an engineering AI chatbot. Most of people just need something for them that's good for them, that's easy for them, coding wise, well integrated with the Google ecosystem, etc., etc. So
yeah, no one makes like my prompts, Neil, are like 2-3 paragraphs long. I think maybe that's why it's like not many models understands what I want done.
But you're telling them their whole life story?
The whole life, yes. Obviously I'm telling them what to research, how I need it presented, what kind of format and all that. And it's like I want someone that can do it right the first time. So my prompts are pretty long. It's some that I use on a daily basis. So it's like once I make them, it's I don't have to remake them, and I have my own notebook of prompts. But yeah, it's all going to be the consumer game of how the majority is using AI, and I definitely don't think it's how I am.
Yeah, you sent me something.
Oh yeah, it's a YouTube video. I don't know if you want to share it. I don't know if you want to share it. I thought it was pretty cool. It's about a 7-minute video on Amazon. I know you're an Amazon shareholder, Neil. So they talk a little bit about the new solutions that they just announced. There was the HGX B200 that has already been announced, but the new one was the GB200 NVL72. I should have maybe gotten you the timestamp, but somewhere in the middle, they start talking about how liquid cooling. See if you can start to hear anything about liquid cooling. But liquid cooling, this is the GB200 is the first time Amazon is actually going to put scale liquid cooling into their data centers. And they talk about it. I thought it was pretty innovative. Maybe, yeah, I would say if we could watch that. Let's see if we can.
First at AWS, liquid cooling. Blackwell represents the first liquid cooling hardware platform we've deployed at scale on AWS. And with it comes a unique set of goals and challenges. This meant meeting the ravenous demand for AI infrastructure, which meant we had to scale fast and scale globally. When we looked at liquid cooling solutions based on what's available in the market today, there were a few trade-offs. First would have been building liquid-cooled data centers from scratch, something that tends to take a while, with long lead times on the order of years. And we knew those timelines wouldn't intersect with the availability of Blackwell. The second option would have been adopting some off-the-shelf solutions, but these didn't scale. They would take up too much data center floor space, would still require major modifications to data centers, or increase water usage substantially. And while some of these solutions could work for lower volumes at other providers, there simply wouldn't be enough liquid cooling capacity to support our scale. So we did what we often do at AWS. We invented our own solution to have the best of both worlds. This is the in-row heat exchanger, or IRHX as we call it. The IRHX is an Amazon-designed liquid cooling system. It can be installed with no changes to the air-cooled mechanical design and minimal changes to existing infrastructure, meaning it can be deployed in existing data centers as well as new builds. The IRHX was designed to allow us to scale fast, standardizing our equipment and supply chain, and it's been built to spec for our standard rack dimensions to fit within our existing data centers. Here's how it works. There are 3 components to the IRHX: a water distribution cabinet, a pumping unit, and fan coils. As the chips in the rack generate heat, cool liquid is pushed from the IRHX pumping unit to the servers. This liquid is distributed to the chips through a cold plate design co-innovated between AWS and Nvidia, cooling the chips substantially. This warm liquid is then returned to the IRHX, being passed through the coils where fans cool the liquid back down while expelling heat out of the back and into an aisle of contained hot air. And unlike many publicly available options, the IRHX can scale efficiently by adding or subtracting fan coil units depending on the amount of cooling needed by the row. As we like to say, with the IRHX, we don't need to design the data center around the rack.
With support for over 900 CUDA-X libraries and AI models, NVIDIA Blackwell is now available
I think that was
for
it,
AWS.
And I need to go downstairs really quick. It just showcases. I mean, Meta, I don't know if you know Meta. Well, you know Meta, but Meta had to do it took them a whole year to redesign the data centers for liquid cooling. About 2-3 years ago, they mentioned that they were redesigning the way they were building data infrastructure because of the AI space. And it was pretty cool to see Amazon kind of create their own unit where they can do this back into their traditional air cool, and they don't need to recreate a design in this product. So I thought it was pretty cool. It just shows the innovation that AWS is. And if I was a Amazon shareholder, which I am indirectly through the Mike 7 ETF, but if I was directly, I would have gotten pretty excited with that. It's such a small thing, but when you're dealing with data centers that are being built at massive scales and they're the big market share, you can't have something hold you down. And they found something that was holding them down, and they fixed it pretty quickly.
Yeah. No, I mean, yes, you can go, and I'll take over for now. No, I agree. I think this is going to, of course, make them even more profitable. I'll show you guys the margins of AWS. In the meantime, we do have this stark bullish from X. What do you guys think of the IBM announcement of reducing HR by 8,500 employees due to AI? Is it early? Yes, I think it is. But then again, I don't know if they have overhired over the last couple of years or not. I assume that maybe they have, but just like everyone. But let me show you the operating margins of AWS. So it's already insane. Okay, so this is basically it. This is AWS revenue over the last couple of years, and of course, you know the drill. This is all available to you on fiscal.ai, previously FinChat. You'll get 15% off if you use our link, and new users will get 2 weeks of Fiscal Pro for free. So first of all, if we look here at the AWS operating margin for the last 12 months, that sits at 37.5%. I mean, this is amazing. You grow revenue so much, like over the last 12 months, this sits at $111.7 billion with operating margins here of 37.5%. Insane business for them. Let's see if I do have still my Google Cloud one up. It should be. Yes. Okay. So this is the Google Cloud one. Of course, you can have your own custom metrics here on fiscal.ai if you want to calculate something specific that does not appear on the platform just yet. You can have your custom metrics there. So Google Cloud, although the growth here has been excellent, right? It's one of the faster growing ones. We are now at a close to $46 billion business for the last 12 months. And here, as you can see, margins, 16.1% operating margin for that business. So far away from what AWS is at right now. But the positive thing is, if you look at the quarterly one, positively is that we are increasing quite rapidly, right? Over the past 3 quarters, we were already above 17%. So I assume that the next quarter is probably going to see the same thing. And then if we do the last 12 months, the next time we're going to revisit this, overall, it's going to be closer to 17%. So we are making our way up and up and up. I've shown you in previous videos what is going to happen with the overall percentage of revenue coming from Google Cloud, and also overall percentage of operating income coming from Google Cloud. How that is going to impact the overall Google business, even if search does not grow as fast as it is right now. Because again, I do think that yes, that there will come a time where search is going to be a very mature business and it will not grow 10% anymore. But that's where you have here YouTube, right? If we go and look at the other, right? You have YouTube ads, you have the Google subscription. Of course, you also have Google Network, although that's coming down a little bit by design, by the way. So Google can make their case and say, look, this business is not really in full focus for us anymore, but okay, still generates quite a lot of revenue for them on an annual basis, just over $30 billion. But I have here Google subscription platforms and devices, 41, close to $42 billion in the last 12 months. YouTube ads, $36.9 billion. And then Google Cloud here at $46.9 billion. So yeah, this is Google excluding the ads, the Google search business. That's still a business that's growing, that's earning them $155 billion in revenue and growing quite rapidly, right? Even if we don't have to look that far, right? Let's go for the last, let's do 5 years. Okay, over the past 5 years, 5 years ago, these businesses were generating Google $77.6 billion. We're now at $155 billion. Quite a big increase, I'd say. Google Cloud compounded 34.4% growth here. YouTube ads 15.8%, Google subscription platform 16.7%, and then Google Networks just 6.5%. So yeah, whenever I hear, oh yeah, but Google search under pressure, etc., I'd say yes, maybe it will be under pressure in the future, but don't forget these businesses, $155 billion in revenue for Google. So yeah, I thought I'd mention that in the meantime. And like I said, all of it available on fiscal.ai, proud sponsor and partner of this live stream and of our channels as well. Now, let's see what we've got. If we got here some interesting questions. Of course, all questions are interesting, Neil. This is a very interesting bet. AMD will outperform Nvidia in returns going forward. Let's actually see where our AMD is at right now. Let's see what we got. Of course, still SoFi, very, very good day. Closed at above $20. So AMD sits right now, actually pre-market, it is up a little bit. As you can see, it's at 142. It's up 3%. It's up 3% because Goldman has a price target of $140 on it right now. So AMD is going to be up 85% since the lows of April. Let's see what Nvidia has done over that same period. Let's do this. Actually, Nvidia has outperformed. Currently, it's up 90% for now. Of course, Nvidia, a $4 trillion company. AMD right now 200 and I guess still 220 or something like that. Yeah, 225, maybe 30 when the market opens. AMD to 1 trillion, 5x, 4x now is much more likely than Nvidia to. I agree. I mean, yes, if you have to add 16 trillion or 600 billion, of course, that's a big difference. But the only way AMD reaches $1 trillion in market cap is if the business grows as fast as Nvidia did. Right? You're not going to reach $1 trillion in market cap by growing 10%, 20%, or even just 30%. You will have to double your business quite rapidly, for sure. Let's see what we've got here. Do you think the Brazil tariffs will affect Mercado Libre? I don't think so. I don't think so, because Mercado Libre, don't forget, operates in Latin America. So I don't think that's going to be a big issue. Also, from what I understood, is that Brazil doesn't even export that much. So yeah, 50% tariffs, but 50% tariffs on a very, very low dollar basis. Don't forget to drink water when it's hot, folks. Very important. Very important. With regards to, of course, all of the other smaller players, whether it's Iron, Cypher, Core Scientific, Applied Digital, and all of that, liquid cooling or not, it doesn't matter. What matters here is capacity and energy. Okay, those players have the infrastructure, the capacity, and are quite efficient. Okay, they're quite efficient. A lot of them are maybe also already liquid cooled. I know that Iron does have air cooled as well. But as long as it makes sense energy wise, cost wise, they are still going to be in play, because the demand is just so high. And if they have the infrastructure in play because of their Bitcoin mining business or crypto mining business, then I don't see here why this should be bearish. The only way this is going to be bearish for an Iron or whatever is when we're going to hear that, oh, actually, we have overbuilt, we have too much capacity, not enough demand. That's when you could make the case that it's going to be bearish for them. Other than that, I don't think so. With that, Jose, did
And so
3%.
What happened?
AMD is up 3% before the market opens.
I saw they got a really nice, or someone posted in the comments, I think, that it got a really nice price target.
140, I think, although we are already at 140.
Nice. These analysts know what to do, yo.
Exactamundo. Let's actually have a look at what our bet is doing right now. 9.5. Okay.
Not that bad. I forgot what we entered in.
9.5. I think 9.7. It did drop a little bit lower. It did drop like to 9.1, just on that 50-day moving average. So let's see if the black magic here is going to work out. 200. City gave AMD 200. Ooh, okay. I guess let me check that. Let me check that real quick.
Yeah, that's what I saw, that somebody gave them 200. I didn't know if they were trolling, but now more people are doing this. Neil, this is an interesting one. I know it got a popular talked about. Cadence system will definitely benefit hugely from Nvidia and AMD. I think it's really early and under the radar now. I don't see this being a huge benefit. This is stock. Did you find the price target? Maybe we can look at the price target and then
HSBC. I see, not City, but I don't see a reason. Wait, let's see. No, I only have here a. Maybe it is this, because I am seeing the Goldman Sachs one for 140 and the reasoning behind it, but I am still not seeing the HSBC reasoning behind. I am seeing the $200 price target that I see, but I usually like to hear why.
Read why. Yeah, nothing on X explaining why. Usually X shares all those stuff. Let me look with you.
I have something like this. I just don't know if this is relevant. So HSBC upgrades AMD to 200 as MI 350 series pricing will be 25K instead of 15K.
Oh, wow.
Okay, so it is. Okay, cool.
Now the question here with that pricing is it a pricing increase, or is it a better price because of the demand and now they don't have to sell it at a cheaper price, or is it just the bill of materials has increased, that they have to sell it because of whatever improvements they've made. So it's just looking at the end price is very weird.
So it says here that given MI350 series limited incremental bill of material
Okay,
cost
nice.
and performance comparable to NVIDIA's B200, we believe that it can deliver a much higher pricing premium than earlier anticipated. And then here, of course, they give us a couple of comparisons, performance and specs, and then we get this. So I guess basically they up their price target because they believe AMD can increase the price.
Yeah, can increase the
and
server's
still
price.
stay
Yeah.
be very, very competitive here, which is great. Which is
Mhm.
great. Always good to know. Always good to know. What does UBB mean?
Where do you see UBB new? Not
All,
sure.
all over.
AMD UBB. Universal something. I don't know.
Universal Basic. UBB new, UBB old. Let's see if they have something.
They have something here. It's probably something that I should know. UBB meaning.
Maybe UBB meaning chips or something like that.
Yeah. Don't tell me how to Google. All right.
At least you're Googling. Whew. Thank God. Unit base price, Manuel is saying. Interesting.
We got to learn something new. All right. Everybody Google UBB real quick.
In a single UBB board. So maybe it's a
Universal beverage base. Google says, but not sure. Universal baseboard.
Interesting. A single UBB board, but why aren't they saying what the heck this is? What is?
All right, Neil. I mean, we'll figure out eventually.
No, universal baseboard. It is a universal baseboard. AI accelerator baseboard. Okay.
But I don't get how they're trying to explain it here, new versus old in it. With the others. What are the others?
Yeah. New estimates, others, old estimates.
Are they old? The MI3? I don't know. Yeah. Only HSBC knows. That's why you got to pay them the big bucks so they can tell you this. Sometimes they just analysts try to find a secret angle so they can pair their own.
UBB. It's like, oh, look at us.
ChatGPT to the rescue. Yeah, I didn't feel like doing it. I should have done it though.
No, it is universal baseboard.
Yeah, but I mean, in regards to how they were explaining it, why.
I mean, we could just image search and but to be honest, I lost interest already.
Yeah. This question, I don't know if there were a few questions that came out after the Amazon video, Neil, that I left, but this one, the Amazon video you shared earlier talked about Nvidia's Blackwell a lot. Is that bearish for them buying anything from AMD? I don't think so, Eddie. I think the main reason they included the liquid cooling with this video is because they announced the GB200 NVL72, and that's a system that has to be liquid cooled. There's no way around it. So it kind of made the best sense for them to kind of showcase their liquid cooling solutions with that solution that is a need for liquid cooling. I'm pretty sure the MI355, because there's not that massive interconnection just yet, there's still plenty of air-cooled solutions of it. I'm pretty sure you can go with the liquid cooled, but you can still run them air-cooled. For example, the B200, the one that they talked about a lot in that video, the B200 is still air-cooled, and Amazon mentions for the B200, they were still going to go with the air-cooled transformation, but now they have the adaptation of the liquid cooling. I thought I saw some other question, Neil. I forgot. It was like, does this mean bad things for liquid cooling companies? And I don't think so. Usually these big cloud server providers or these data centers companies like Amazon, like Google, like Microsoft, they cut off the middleman pretty quickly, because they build these at what you would consider manufacturing scale levels. And anything that you're building at manufacturing scale level, you have to build in-house. That's why, for example, that's why Microsoft, Amazon, and all these places don't really order much of their AI servers from Supermicro, from Dell, from HP. It's very rare if they do that. And the only time is like if they need maybe more capacity, and it's just better to pay that margin overly. But typically, these companies build their own AI data servers. They know how their infrastructure is. It's a very rinse and repeat, even Meta platform. So hyperscalers and the liquid cooling, not necessarily should always be put as a bullish thesis as each other, as hyperscalers do their own things to manufacture and improve the efficiency cost of stuff.
Fair enough. And apparently Martin here says it's their new platform, Universal Baseboard 2.0. Nvidia did the same 2 years ago.
Okay. Got to catch up on the baseboard platforms then.
The more we know.
Super Microsoft. Is that what I said? I said Super Microsoft.
Yeah, Super Microsoft is a good one.
But yeah, Neil, I want to take a question that I rudely interrupted you when you were talking about the AMD price target. It was on Cadence. So a lot of popularity on Cadence recently. I think we talked about it.
The Millionaire Maker,
Millionaire Maker. And first, let me say, Cadence is definitely a strong company, very strong. I do believe it's going to outperform the market. For those that are not familiar, Cadence is a company that you use their software to design chips in general. Now, is this like a hyper grower stock, like a massive multi grower? No, because think about it. Once you design a chip, you're always going to design a new chip, but it doesn't matter if you sell 1 million of that chips or one of the chip. The way they make money is through seat base. So obviously you're going to have a little bit more engineers working on designs, but you can only have so much talent working on an engineering team for one form of design. So it's not like you're going to see hyper growth in their revenue. You're going to see strong growth. Though I think the best way to explain it is like Adobe, right? Adobe with AI. AI is not going to help it grow dramatically in forms of revenue numbers. It's just going to help increase its overall moat. You are kind of getting maybe more, a nice tailwind is right now as AI is being integrated into all these solutions and all this technology, you're going to see more things being designed, better chips, better electronic boards. So they do have a tailwind there. But it's not going to be something where you're going to see a 40, 50. I don't even think you're revenue growth. I want to see what their typical revenue growth has been. Regardless, because it's seat-based numbers, right? Seat-based, it's their revenue business model. The revenue growth rate is a little bit slower than if it was more of like a consumption base. Like, for example, ARM, where you do more of a licensing thing. That one has a huge growth opportunity. But revenue, I mean, strong business, again, it is a market performer, but is it under the radar and all that? Maybe in the short term with all the excitement, it might be, but nice tailwinds, nice growth opportunity, but it's not going to be like that big mover, in my opinion.
Yeah, so it seems like the services segment is increasing, right? So that has grown, of course, at a CAGR that is much higher than their mature business. It's still growing 14.6% compounded. And actually, let's just have a look at what has happened over the last
And I also want to say
3
this
years.
is more just talking about. Am I muted? Oh no, this is more talking about kind of their chip design. They are doing a few acquisitions to move into other aspects as well that can help with the revenue grower. But that chip design part where it is more of a seat base, I don't see that being the biggest driving force for something like this. Still, like I mentioned, I don't want to sound bearish, but I just want to control the bullish sentiment behind it right now.
Yeah, let's have a look if they said something in their last conference. Business is growing with top line in low double digits. Operating margin is in the 40s and expanding, so it's good to hear. High gross margins and strong Q1 backlog. IP grew 40% in Q1. 2024 was a record hardware revenue year, and 2025 is expected to be another record year for the company. China Q1 growth was 19% year over year. And of course, now that we've heard the good news for companies like Cadence, we should expect that to continue, that momentum to continue. Funny. Intel CEO impact, because Lip-Bu Tan was their previous CEO. And the appointment of Lip-Bu Tan as Intel CEO is viewed positively, with potential for increased collaboration and adoption of Cadence solutions at Intel. Lip-Bu Tan has expressed a desire to move away from custom ADA and IP, which could benefit Cadence. I mean, I think we've heard Lip-Bu Tan and Intel talk about their partnership with Cadence more recently.
I think Lip-Bu Tan still has muscle memory, where sometimes he says Cadence instead of Intel.
And I mean, it's a good thing for Cadence. It's definitely also a good thing for Intel, because Cadence is definitely a top class company. And I mean, that's actually, I do wonder, Intel.
And like I mentioned, I believe Cadence is definitely going to be a market beater. It is. I mean, they have the IP platform. But to expect, just because you're selling millions of Nvidia chips, it's going to correlate to a way bigger growth of Cadence. That's the wrong way to think about it. It's more, you got to think about it. Hey, look, now that technology is evolving, there's going to be more chip designs being happening, not just by Nvidia and AMD. Big hyperscalers are also designing all these different chips which are being integrated into AI. You also have kind of like they saw their IP, where you can kind of license some of the solutions, but everything is controlled to not volume based. Maybe the IP not, but yeah, strong market opportunity, but don't correlate it with AMD and Nvidia.
Intel is still beating the market this year, up 16.5%. This was a very funny one, because usually when I see AUC is like assets under custody, but here it's assets under construction. $50 billion actually. Slow and steady growth. Yeah, I think for Cadence that is definitely the case. Definitely the case. Let's see if we've got now some questiones.
Yeah, and let's say slow and steady grower, maybe a little bit better than slow, steady grower, but outperformer for sure. Strong business model out there. And if I was to, I wouldn't be upset owning Cadence at all. Definitely be a nice software play in the semiconductor industry.
Yeah, for sure. SoFi CEO on CNBC now. Unfortunately, I do not have CNBC, so don't know what Anthony Noto is saying. Hopefully, Jim Cramer doesn't say that he loves it, because that would be bad for the stock. The stock that is now currently above $20. So we'll see. We'll see what happens. But yeah, for SoFi, I mean, this is of course great. Stock is up now 35% over the past 2 weeks or so, up significantly, more than doubled since the lows in April. But don't forget, I mean, for me, this is just the start of something big. Of course, we're back to prices not seen since the bubble here in 2021. But yeah, SoFi is, I would say, 10 times better company today than it was back then. And we are trading at around the same prices. So yeah, although we can celebrate, I don't think we're at the end just yet. Alibaba is one where, I mean, I own it, of course. It started the year very well, as you can see right here. It was actually closer to $150. We're now back to $103, $104. Not that great if we look at the chart. Back under the 200-day moving average. RSI is very low. I've picked up some shares, I think yesterday or 2 days ago, because I still think they're doing very well. And so, yeah, I picked up some Alibaba. I think it will do very well in the future. So no worries there. I wonder if eventually TSMC, I don't think, even if they want, I don't think they'll be allowed.
No one would allow it. No one would allow it. It would be the easiest no in
Yep.
history.
I don't think they can just maybe have like a strategic partnership, but that's about it. I don't think they will be allowed. What is the ticker? What is the ticker for which
Which one?
name?
Music.
Yeah, which name?
Music Mansion.
Nebius released their sustainability report. Okay, let's have a look. I did see that Shopify released a blog yesterday talking about how they're using Toloka, which again makes sense because I think their CTO, if I remember correctly, and Jeff Bezos' expedition invested in Toloka, so it's normal that they would be using it. So let's see if we have some interesting data coming from that sustainability report. If you see music answering for the ticker, let me know. So Nebius Group 2024 Sustainability Report highlights the importance of sustainability to long-term value creation in AI infrastructure. Let's see. So leading AI infrastructure builder sustainability report shows how sustainability drives competitive advantage with approximately 20% lower TCO and market-leading efficiency metric. 20%, that's not bad. Not bad at all. Let's see if we've got here some actual numbers that you can work with and not just some blah, blah, blah. Let's see. So yeah, the 20% lower TCO infrastructure efficiencies, including resilient hardware design and energy efficient solutions, while its custom designed servers saved 10 gigawatt hours of energy in 2024 alone compared to off-the-shelf alternatives. Okay. That's a very compelling case you can make when you go to some of the big players, for sure. They talk about their flagship data center in Finland, showcases the company's approach to marrying high performance with outstanding efficiency in its infrastructure, including in-house designed hardware optimized for thermal management, water and refrigerant-free air cooling, and recycling of server heat. I mean, we've just seen Amazon explain quite a lot of those components right now. The data center's innovative heat recovery system covers 65% of the local municipality's heating needs, transforming what other providers consider waste into valuable community resource. I mean, this is great, and this is what makes Nebius also very special and a good option for a lot of the clients. I do think I've seen a post from let's see which one it was, talking about them going after bigger enterprises actually.
Nice.
Here it is. Actually, we got two posts here from him, from Mateus. So first one, we've got an update here.
You want me to go check it out?
Actually, yes, you can go check it out. you can go check it out. So the New Jersey data center currently under construction, according to the CEO of Data One, the firm managing the build phase one completion is now expected to be delayed by about 4 weeks due to supply chain challenges. This isn't entirely unexpected, given prior indicators that delays were possible, such as slight setbacks with UPS CDUs and piping. Importantly, it doesn't change okay, this is just his opinion right here. But he did talk about this thing right here. So yesterday there was that Shopify Nebius blog post for talking about Toloka. So Roman Sherlin, co-founder and chief business officer, said the following. I think the most important transition we've made is moving from serving AI startups to now focusing on two key dimensions. First, securing enough data center capacity and power to support the largest customers in the market, like super labs and hyperscalers, and being able to meet their needs. Second, continuing to build and expand our software stack to stay relevant for enterprise customers. I believe the next 2 years, next year or two will mark a major shift for us towards the enterprise segment. I think the last 6 months have been really promising. Some use cases have proven successful, and now we're seeing a huge acceleration in enterprise adoption. So yeah, they can't say anymore it's not working. Of course, this is very positive for Nebius business and Nebius future. In the meantime, Nebius has seen a little pullback from the top here. We're down around 16% or so since the top, but of course up quite a lot since the April bottom. Could we see it go back to the low 40s? It's definitely a possibility. Definitely a possibility. I mean, the 200 sits here very close to $40. I'd love to add more at $40, and we'll see what happens, because 46, 45, we've seen it rebound here before a little bit, so could happen here again. But I wouldn't mind. Going to buy it at the 40s.
Neil, one thing I hear a lot about kind of a strength of Nebius is their balance sheet. But I feel like in this AI market, those that kind of talk about the balance sheet for Nebius need to accept that could change pretty quickly. I mean, if you're building now all these massive data center GPUs, while they start revenue in day one, it takes a few years to make that money back. Is that something, as a Nebius investor, that first you're happy about their balance sheet, but second, would you be worried if you start to see that balance sheet dwindle?
I mean, in what?
Even though they're building it for data center buildouts, because I mean, chips, if they're building these massive data centers, right? That's data center that they're building in New Jersey. The orders for the whatever chips they're going to put out in there haven't gone out just yet. They're not even paying for it just yet, right? It's going to come out eventually though, and those chips aren't going to be cheap chips, right? They're going to be pretty expensive, and those chips alone could be a few $100 million in one data center, depending on how big. And I don't know their balance sheet, but it should be expected to start to see maybe some of that balance sheet slow down a little bit, unless they have a cash flow machine happening in some other business that can help maintain that strength. Not a bearish point, but I'm just saying most Nebius see that as a bullish thesis, that balance sheet. So just want to hear your thoughts there. And also, Colts here's wondering if would you consider Nebius only a buy in the low 40s? Obviously, for you, it's a little bit different because you did buy a lot earlier. So I don't know if sometimes we get cost basis bias. If you didn't have a position, would you be trying to buy a little bit here, or would you still be kind of patient and wait for that $40 price point?
So maybe I should have explained it before. So to me, of course, waiting for a 40s makes sense because I already have a nice position, but I do still want to add. That said, would I mind buying right now 46, 45? No, because I do think that this company is going to be worth way more than 10, 11, 12 billion dollars in the future. And that's the answer I'll give for someone that doesn't have a position. If you think this is a short-term trade, then maybe it is a bit risky right now still. But if you want to hold it for the long run, and you believe in the thesis, you believe that Nebius can be a giant company, then start opening up slowly right now at $11 billion, right? Because I find it funny because sometimes I see, stock X is trading at $30, stock Y is trading at $30. How does that make any sense? I'm like, you know that the $30 doesn't tell you anything, right? You have to look at the size, the market size, market cap size. And so here as well, yes, it says $46, but it says $11-12 billion in market cap. I think this company can be worth way more than that in the future. So you can start nibbling right now and then dollar cost average in case it does go lower, because I do still expect this company to have an ARR of closer to $1 billion this year for sure.
And I'm not gonna lie, Neil, I don't own it, but this is one that in a pullback, I wouldn't mind adding into it. Like Achilles here talks 40 is nice because that would be oops, I think you just there we go. would be nice, below $10 billion market cap. I mean, if you do expect these AI factories, these data centers, and then plus all the other stuff that we've seen with Nebius that I've learned through you, Neil, where the autonomous vehicle industry, for example, 10 billion is one of those that, yes, I could see this being a multi-pag, or if any of these markets evolve. So I'm not in a rush, but if we do see a pullback, it's one that I wouldn't mind adding to my portfolio.
Yeah, exactly.
So put that on the price alert. Let us know. I forget how many price alerts you have,
No,
but you have a
now
lot.
not. I mean, now we have Applied Digital that's gone from the list because we already jumped in like some degenerate gamblers. But yeah, none.
Who was it that made us do it?
Roberto,
Oh
I
man,
think.
Roberto, and he's not even on
I
here.
think
Wow.
he was here. He was here before. Yeah, he was here before. Roberto from I think Guatemala, if I remember correctly. Okay, before the market opens, we have 15 minutes, but just so we know, European markets are green, Asian markets are mixed. I'd say pre-market in the US, we are, well, red, but basically flat, literally basically flat. Oil is still down.
Paying $3 billion for some cereal.
Yeah, and it's great. Roberto is here. He's here in the shadows lurking.
What's up, Roberto?
The 10-year is back under 4.4, so we're back to 4.34. I do wonder how much Kellogg's is worth, because I mean, last time I checked was a couple of years ago. It was $61, $63 or so. All of this is very unhealthy. All of this here, very unhealthy, very sugary, but I love it. I love Kellogg's. So good, Frosties and Chocos. But we're not sponsored, so we're not going to talk about them. Let's see where they are. I think it's KO, the ticker. No, that's Coca-Cola.
What are you, some noob? Even though this is an AI, I know that.
You didn't know anything. It's WK Kellogg now. So they did change because okay, they were up 20. It's a new company. What is this? Yeah. Okay, so maybe they merged or something. Yeah.
Did they spin off?
Because before, I'm pretty sure their ticker was K. And now it's...
How sure are you?
I am pretty sure. Did Kellogg split? Maybe split. Yes, Kellogg did split into two separate companies in 2023.
It was Kellanova before.
No, the Kellogg company officially separated into Kellanova and WK Kellogg. Okay, the more you know. This is not only an AI and chip fintech channel. This is also a channel talking about the cereal companies, because
trivia preparer. It prepares you for any trivia you might experience in the next.
We do absolutely everything. Absolutely. Let's see what do we have? Ooh. Oscar Health is back under $16, it seems. Yesterday it was on 2.8, now down a little bit more. Let's see. Let's see what we got. We're getting closer to that 200-day moving average for Oscar, and it happened because Jefferies maintains underperforms and cut the price target to $9 from $12. The analyst warns Oscar likely made the same risk adjustment reserving error as Centene, the company that removed their guidance and crashed 40% last week, with exposure heavily tilted towards high risk rates like Florida, Georgia, and Texas. So let's see what we got here. Can I zoom in? No. Okay, it's good enough. Oscar, around 90% premium exposure in FFM non-expansion states increases risk. Potential of $880 million in RA payable increase if Oscar mirrors Centene's risk score miss. Again, it's only anticipation that Oscar could be in trouble just like Centene, and if their business is mismanaged as well. I don't know. I just found I think Oscar is just a health insurance tech company, which means that they should have figured this risk out before the other ones. And I would have assumed that their guidance would have changed accordingly. Now, again, I'm not a pro and an expert in that field. So yes, I do have a small position, but I went here with the invest and investigate strategy this time. And so with them, I said the same thing with United Health. First catalyst is the upcoming earnings report and guidance to see what's going on here. With Oscar, I've said it before as well. It's nice to see the stock run like this. But of course, I honestly, I don't really know what exactly has happened that it had to go up 65% in a matter of a couple of days or so. Definitely a lot of hype here. I do believe that one of these candles right here is because of that Senate bill that wasn't as bad as feared, so that helped them. But since then, yeah, it has come down. This here, that big drop here is after Centene removed their own guidance. So Oscar Health did drop 20%. Big Beautiful Bill did pass as well, but I don't think that has hurt the stock immediately like that, because I think a lot of it is priced in. Plus, there are still uncertainties around what's included and what's excluded and how that could impact that business. And so we are getting quite close to that 200-day moving average, which sits at $15.40. We'll see. We'll see if that holds or not. But yeah, the big catalyst for these types of companies, Oscar, United, and Centene, is definitely the upcoming earnings report. So we get some commentary from management.
Yeah, and pretty cool. I was just reading a Florian comment for this kind of trivia day. I'm not going to share it, but Florian, thank you for sharing insight of what cornflakes were originally sold for. The more you know. Then let's see, what else do we have here? Neil,
it's for you, maybe.
Yeah. So I don't know who this hurts more, if it hurts investors or CoreWeave more. I mean, in theory, if you depreciate things faster, you're gonna get to be able to write it off as taxes a lot quicker. And then two things. So one can see it as a bearish case or kind of a bearish sentiment for CoreWeave, saying, look, you're taking 6 years to depreciate your value. That means that you're kind of writing things off a lot slower. So it's not going to impact your earnings that quickly. Because if you write things off, you're going to have to write it off in earnings and stuff like that. So you'll have, if you write it off in a longer time frame, your earnings will theoretically take a less of a hit. Now, there is an upside of depreciating it faster as well. If you depreciate it faster, you're able to write it off on taxes a lot quicker, and you're able to free up free cash flow. And then you can use that free cash flow to buy even more and more GPUs even faster than before, because now you have more working capital. So I don't see why this seems like a bearish take. It's just, what would you want to do? Would you just want to write it off on the earnings a little bit lower, or would you want the free cash flow right away? I feel like one can say the bearish thesis is you're writing it off too quickly. Now you're trying to just build all these free cash flows so you continue to have a working cash flow positive. So I don't know if this, whoever posted it first and kind of drives the sentiment with it, that sentiment will then continue. But I could see kind of the reverse sentiment come out. And if that would have came out first, it would have followed that sentiment as well. So I don't know if this is necessarily the biggest, scariest thing. It's just understanding how it affects someone. And you can definitely take a bearish reason for someone depreciating something a lot faster.
I was just reading about this Dr. Kellogg guy because that piqued my interest here. John Harvey Kellogg. Very interesting. Very interesting. Maybe I'll think twice about eating Kellogg's now. Let's see what we have.
Florian dropping knowledge for us.
I'm sure nobody knows about this.
Yeah, I don't know. I believe you already know. I never knew anything like that either.
Possible catalyst for Alibaba. I mean, possible catalyst is another very good earnings report, good cloud growth, continued cloud growth for sure, because that has been quite good for them in the last couple of quarters. And yeah, that's about it. I think the next earnings report will again show strength in that business, and maybe even in the international one. Of course, the whole tariff story does play its part here with Alibaba, for sure. We have 6 minutes to go until the market opens. Has anything?
I have this question here, if anything, Neil. So, any thoughts on onsemi? This is a semiconductor company that deals with a lot of solutions for the automotive market. This is one of the stock I've covered a few times in my channel, Neil, and I've talked about it that this is going to be a very slow stock. The main reason its core market is the electric vehicle space. That's where most of its revenue is coming from. Very similar to what I kind of shared my thoughts on kind of air test system is. For companies like this, it's going to be crucial for you to have a strong balance sheet where you can outlast this negative cycle in the EV space. But if you're able to outlast it, and unfortunately we don't know when that's going to happen, it can definitely be a nice returner over time. Now, onsemi is one that I've in the past, when I've looked at their balance sheet, they're ones that even during this downturn still are free cash flow positive, still have a very healthy balance sheet, and that's what you want, because then you don't have that scenario like Wolfspeed. Wolfspeed is a company that was very dependent in the EV space, but they didn't have the balance sheet to outlast this negative sentiment. And when you don't have the balance sheet to last it and you're leveraged, really bad things happen. So I like onsemi. Other growth opportunities come that these power solutions can be used in things like the robotic space whenever they take place. We're seeing kind of these power solutions also being used in high voltage server solutions in the data center market. So they have growth opportunities. But like most other companies, it's all going to be dependent on how their core revenue driver is happening. And I think that EV business is still going to take some time. So this could be another quiet stock for another few quarters, maybe even a year or so. It's one where I, every so often, maybe very rarely, once a month, once every other month, Neil, I tend to buy maybe a little bit more shares and shares and shares, just because I know I have the accumulation phase here is going to take a long time. I think we talked about it in the past. It's like, I don't really care if in the 5 years my stock is a complete outperformer if the first 4 years it didn't do anything and the last year is when it gave me that multi-returner. That's how I see this. This is going to be one of those stocks that in 5 years has that huge potential of outperforming due to the various tailwinds, but it's going to be where like a majority of that time frame is going to be very, very annoying. It's going to be very quiet. The first 4 years might suck a lot, but once that switch turns on, it's going to be a massive grower. So it's going to be really patient for this one. Hopefully that makes sense.
That makes sense, yeah. And some people will say, oh, but opportunity cost, right? Yeah, maybe if you can time it correctly, then yes. Like, it's always opportunity cost after the fact. It's opportunity cost because after a couple of months, like, I could have bought this, it went up, sold, and then buy this. Yeah, okay, I could have had the correct lottery numbers also and not be here, but here I am. Apparently, there were some job numbers that came out. So initial jobless claims. Actually, let me pull this one up. I don't know who this guy is, but seems to be tweeting in all caps all of the time.
This guy.
Initial jobless claims come in at 227,000 versus the expected 236,000. These claims are how many people file for unemployment. It was the fourth consecutive decline to the lowest count in 7 weeks. A recession typically sees 350 to 375,000 jobless claims a week. Resilient labor market, according to this person. Not this person, because he
Not
doesn't
that
know what
person.
he's doing. I'm sure he knows, but whatever.
Yeah. And one more minute, I just want to take this question from Eddie because I'm pretty sure after the open we might head out. Eddie asks, Air Test, Wolf, Navitas, which would you pick? Eddie, for me, if we're talking about EV market, I own Air Test system. We talked about it last 2 episodes. I entered my YOLO play with Navitas when I did the Applied Digital, so I do own Navitas now. But on semiconductor is another one that I own. Wolf is just too risky for my play.
Although we wished we had YOLO that one last week.
Yes, that one almost 2x from 3x, right? From its bottom. So we YOLO'd the wrong one, but still.
Yeah, this one was up 800% at one point. But it did drop a little bit. With that, El Mercado is open. It is open right now. On the right, you will see here the real-time updates. On the left, I guess the heat map. We need a couple of seconds, but you can see here on the right we have Oscar down now 3%. So I think it did reach that 200-day moving average. It is now not really recovering. So it's still down 3%. New holdings down 1.4. Iron down a little bit. Google down a little bit because why not? Rocket Lab is flat. Uber down 0.3. PayPal 0.3 as well. So not much movement here in the red markets. Let's see what happens with the green folks. AMD up 3.4. Let's go. Intel up 1.8. I'm double winning here. If Nvidia is red, I am triple winning. No, it's not. It's up 0.5% here. Trade Desk is up 1.6. Okay, nice little recovery from that. Reddit keeps doing well here. Robinhood at $95. Micron $123, up 1.1%. SoFi is still up 1% now. So overall, AST Space Mobile up 1.6. Overall, still pretty good market right now. Okay, this is the updated heat map, a little bit better. A little bit more realistic than what we've seen before. Tesla is also up 2%. I believe Elon did say that they expect Grok to be integrated into Teslas pretty soon, and that they are going to expand robotaxis in Austin as well. Of course, yes.
I'm kind of curious to see how that Grok integration is going to be.
Yeah, and who gets it, of course. Like if it's just a select few at first, or because do you get the FSD upgrades pretty fast, or you have to wait a couple of weeks until after?
I tend to get it at first, maybe not the first week, Neil, but I signed up where I don't mind doing like the testing modes, which still go over through obviously rigorous things, but it's like first I think their employees get it. After the employees get it, then they test it into a small consumer base of those who approve, and then after those tests they give it to the full public. I'm kind of the one after there. And it's usually AI 4 model hardware are the ones that tend to get it first. Luckily, I do have the AI 4, and I'm gonna guess if they integrate Grok, it's gonna be on those models first.
Yeah, most likely. Before we close, we can see here Oscar just on that 200-day moving average right now. Would have thought it would be done a little bit more. Let's see what Mercado Libre is doing. Not much. Also sitting on that 50-day moving. Let's see one last thing. Nvidia.
AMD up about 4%. Really nice.
Yes, sir. 4%.
Air Test System is doing pretty much a nice turnaround story, Neo, from kind of earnings drop. So I'm happy there too. Yes, how did you know I was going to talk about this one? That's so weird, Neo.
You just said it.
But you clicked it first before typing, I think. Did you not?
I am so good.
That's what I was saying.
Up 15% since the lows yesterday. So the momentum keeps going. AST is also retracing now. Also 20% since the highs here back in June, sitting on the 20-day moving average. Very interesting here. Very interesting. Okay. With that, thank you all for joining us today. We are I don't know if we're going live tomorrow. Probably not, but maybe we can. Maybe we can.
Maybe we can. Yeah.
Maybe we
We'll
can.
see.
And if not, we'll be back, of course, on a Monday, 8 a.m. As always, bring your friends and family because the more people, the better. Do check out Kellogg's Doctor. You will be surprised what you can find there. All right. Thank you all. And we'll see each other tomorrow or